All right, welcome everyone to our podcast today. We're actually on Facebook Live today recording our podcast. It's kind of exciting, new thing we're trying out. Get to see kind of in the background how it goes down.
All right, well, we'll see how it goes. All right, everybody, welcome to this week's episode of the Now Add Salt podcast. Ryan, thank you for getting us started here. And today I want to talk about so yes, I'm Andy Johnson. I am a CPA. And the purpose of this podcast is to help CPAs and bookkeepers and tax advisors deal with the ever-changing world of sales tax. And I thought what would be good today would be to talk about how you can help your clients fight sales tax audits in little tidbits of information I think will be very helpful. So today I want to talk about a couple of major areas that always almost always in any sales tax audit, create problems. And where there are problems, there are opportunities. And so I'm sharing a slide that talks about missing documents. That's one of the major areas that come up in a sales tax audit. And usually when I talk to CPAs and tax advisors, they're a little bit hesitant to get involved in sales tax because they feel like it's outside of their core expertise and they don't want to take on that risk. Yet, when you really analyze what creates most of the problems in most state and local sales and use tax audits, it is areas that regular CPAs and tax advisors could easily help their clients with. And so what ends up happening is too many businesses overpay their sales tax audits and too few tax advisors get to help their clients and take advantage of this opportunity to deepen their relationship with the client, to really protect them and to grow their business. So let's tackle this one area today, and I think we'll cover some more areas in the future. So welcome to all of our Facebook viewers, assuming there are any. I don't know if there are, but and welcome to all of our podcast listeners. So if you want to just listen to this, you're welcome to. If you want to find the video, there's going to be a link to the video in the podcast notes. So you get a chance to see it all. All right. So missing documents are always a problem in sales tax audits. And the major ones that I want to cover today are exempt certificates and invoices. So you know that if you sell something taxable in a place where you have nexus, then you must either collect the sales tax upon the sale of that item, or you must collect the tax. So a certificate in lieu of the tax, that's the key. And I'll talk about invoices here in a minute, but let's cover exemption certificates first. So what happens is, why I say that exemption certificates are the low-hanging fruit for any auditor, because it goes to kind of a basic premise that we all seem to live by, and that's we want the biggest bang for our buck from the least amount of effort. At least most people seem to operate that way. And sales tax auditors are probably no different from regular people. They don't look different. They don't tend to act different. They just have a job to do. And so let me just describe for you how an sales tax audit goes, and then you'll see how you can help your clients. Or if you're, in a business yourself, how you can help yourself. So auditor comes in and they say, I need to review lots of things, but I want to look to make sure that you're collecting the right certificate. So if you would, taxpayer, I would like to get a report of sales you made. Let's pick a month. Let's say July 2015. Really simple. So July 2015, give me a report of all the sales you made in the state that I'm auditing for, on which you collected no tax. So a report of your tax-exempt sales. So you go and produce that report, and if you're the tax advisor or CPA, you can definitely help them produce that report. That doesn't take any SALT expertise, right? So you produce the report and you turn it back to the auditor then. And I don't want to gloss over just what a pain it is sometimes to go back that far and produce a report that just shows sales on which you collected no sales tax for this particular state. A lot of taxpayers don't even have their sales by shipment location, right? That's not something in their data. So anyway, you go to all the work and create this report, but you're not done yet because you give it to the auditor and the auditor basically says, here, take this back. And now what I'd like to see, if you could, just give me real quick all the certificate for each of these transactions that you collected at the time of sale, because you should have collected tax or the certificate, or else you should have charged tax, right? And so you're like, oh man, now I've got to go find those certificates. Now, at what point did we have to have state and local tax expertise so far? None, right? So we go back and we try to find the certificates that back up those tax exempt sales. And if your business or your client's business is like 99% of other businesses, there's a certain percentage of those that won't be there. That not only they're not there, but if they are there, they're not filled out correctly, or they're not even the right certificate. They're not dated. They're not from the right state. So you come back and you produce, let's say, 50% of the certificates that should have been on that report. Well, what the auditor then does is say, oh, okay, well, from my sample review of 1 month, it appears that half of your exempt sales are undocumented and therefore really should never have been exempted. So if I look at the whole population of your sales, $100 million worth of sales, of tax exempt sales over the 4-year period, three to five, depends on the state, then $50 million in sales, or take off a zero or add a zero, depending on the size of your client. $50 million worth of your sales should have had tax. That times 8% is 50 times 8. That's $4 million, right, in sales tax that you should have collected, plus 50% for penalty and interest. So I hereby assess you $6 million. Take off a zero and it was 5 million sales, then we're talking about 600,000, right? So you can see how, first of all, why auditors would love to do this type of audit, which they always do. This is an easy thing for them to do. It lets them come across as very reasonable at the beginning. They're not asking for a lot, just 1 month's worth of sales. Then they move to the missing certificates and voila, they hit you with the assessment, and you could protest that sample methodology was not very good, 1 month out of 36 or 48. And they would probably react to that, well, that's what you agreed to. Or they would say, well, let's expand it then. Let's look at, I will pick 2 more months at random at different parts of the audit period, and we'll use 3 months or 6 months. In any case, unless that month was grossly in error, you'll probably still have the same scenario. You're just doing a bunch more work. So this is why it's so critical to have the exemption certificates on file, so you prevent so much heartache down the road. Very, very common to see these types of errors come up in a sales and use tax audit. So at what point did you need really, really specialized SALT knowledge to help your client? Maybe you don't know off the top exactly what certificates this state will accept, but that's just a matter of some research. You can look into, and we could tell you, based on what state's doing the audit and what type of business you are, what are the typical certificates that you should be accepting, your client should be accepting. So once you know that, you can do your own review of the certificates and see if they're valid. And once you know that, you can help your client by going back to those customers and getting them, right? So it's a huge service, and it's easy to measure the benefit, the value of the service. So what I want to share with you is how do you package this service? Well, first of all, it's all about communication. So the other missing document is invoices. And let me just cover that really quick, and then I'll talk about the communication. How do we communicate with, on behalf of our client, with their vendors and their customers to reduce the sales tax audit? So the other missing document that always comes up is invoices. And I don't mean sales invoices, because usually you can recreate those and those aren't the missing things, but it's your purchase invoices. So when an auditor audits your client, they say, well, if you're selling tangible property, by default, that item's taxable unless it's exempt. So if you're buying things and you buy tangible property, it's going to be taxable and shipped to this state. So if you haven't paid tax, or you can't prove to me that you paid tax, then I'm going to assess the tax. I've met my burden of proof. So usually in the initial stages of an audit, where you're talking about the sampling procedures, you have agreed that yes, the auditor will look at the following months, or every 10th invoice, or a stratified sample. And then in that process, the auditor usually has in there some provision for what if the specified item in the pull list, in the sample, what if that item just is missing? Then what assumptions will we make? And so that's where the assumption usually is prescribed to be it's taxable, right? I will schedule that item if it's not there. And usually you agree to that without really thinking about it. You didn't have much choice on what to do there. But that's usually the agreement. So if they look through your purchases and say, the sample that you agreed on, every 10th invoice, say, and 25% of every 10th invoice you just can't put your hands on, purchase invoice, then they just say, yeah, it's taxable. And so that also automatically projects into the population. So the key is on missing documents to be aware as soon as the auditor has identified that there are missing documents, and then to go back to your customers or your vendors and communicate with them. So if it's a missing invoice, then you go back to your vendor and say, hey, supply me an invoice for you. I need to see. I need to prove to this auditor that you charged me tax. If they didn't charge you tax and the item is taxable, then there's one other question you could ask your vendor, and that is, hey, vendor, did you happen to be audited by this particular state and already pay tax on those items? If so, just let me know. On the other hand, what you can do for missing certificates, and this is something you need to be on right away, is now you're going to your customers, because these are sales that you've made. The invoices you're talking about purchases. So missing invoices, go back to your vendors. Missing certificates, go back to your customers. And you're going to send them a letter, typically. And in the letter, you're going to say, hey, we are under audit, and we've made some sales to you on which we did not collect sales tax. And the auditor is saying we should have collected sales tax. And if we don't win this fight, we're probably going to have to go back and charge you sales tax. So before I do that, though, I want to just investigate whether you, by chance, have already paid tax on this item because you were audited yourself, or did you self-assess and remit use tax on these items, or is this item somehow exempt? So that's the communication. In California, there is a defined process for this, and it's called the XYZ letter. And so we tend to refer to this letter under California's terminology as an XYZ letter. And I'm showing, if you're watching, you can see that I'm showing it on the screen here. But this is something that we can make available to you if you would like a copy of an XYZ letter that you can edit yourself, because if your client is under audit and part of the assessment or all of the assessment is due to missing or incomplete certificates, you need to be on top of this as soon as possible. Some states, one of the big states that does this is Texas. When Texas sends, when Texas will send out a letter to your client and say, here are some of our findings. We found that you made Schedule 101 shows all of your exempt sales on which you had no certificate. And we hereby notify you that you need to collect those certificates now, and you need to get them to me before 60 days expires. So they give you the 60-day letter. And that letter is ironclad, and there's nothing you can do to fight it. If you don't have the certificate from your customer by 5 p.m. on the day of the 60th day, you're out of luck. Even if you were to get it the next day, even if your customer in this case is called, Everything for Resale Inc., where it's obvious everything your client is selling is for resale. If you don't have that valid resale certificate in your hot little hands before 5 p.m. on the 60th day, it's over for that audit period. So it's very, very important. And this XYZ letter will be very helpful in reaching out to your customers to get those documents in. Again, it's way too many taxpayers overpay their sales tax audit because they're just not aware of this one area. It's maybe the biggest, I don't know, for some people for sure, it's the biggest exposure area that they have. And there are steps you can do to take to reduce that potential. And as a tax advisor, you didn't need any specialized knowledge to do that. It's just, did I get the right certificates? It's something that you can put your staff people on. If your client doesn't have the time or resources to track these things down, it's a beautiful project for a brand new staff person. After all, you're just contacting a list of customers. You can rank those customers by order of magnitude, right? Make sure you're using the projected amounts. Because if this is a sample, you might look at an invoice and say, well, it's only a sales invoice. It's only $500. And you can do the calculation in your own mind. That's $40. At my billing rate, obviously, that doesn't make sense to contact them. Don't make that mistake. If this is a projected audit, you've got to go through the calculation to see what the real impact is. A lot of times it's 10 or 20 times or more. I've seen it a lot more, hundreds of times. The tax is the actual assessment amount. So you're going to rank those amounts by actual tax that this is leading to in the audit, and then you'll know which ones you need to go after. And it can make a huge impact for your client and a huge opportunity for billable work. So those are two, that's the win-win that we're hoping for, right? Provide lots of benefit for our clients and to where they feel like, wow, I can pay you enough. Your bill is way too small. So that's what we're looking for. So that's my tip for you here. If you'd like a copy of the XYZ letter, just send us. There'll be a link in the show notes for you to get a copy of it, and we'll get it off to you. So with that, Ryan, thank you very much. That concludes this week's episode of the Now Add Salt podcast.